There's a quiet storm moving through the global financial system, and almost no one is talking about it. The US dollar, the currency that once controlled the rhythm of international trade and monetary policy, is starting to slip. Not in the dramatic collapse, but in the slow, deliberate moves of other nations stepping away from its shadow. For over 70 years, the dollar has served as the world's reserve currency. It's been the medium through which oil was sold, wars were financed, and debt was issued. But power doesn't vanish overnight. It leaks. And right now, that power is leaking faster than most realize. Nations that once depended on the dollar for trade are now crafting alternatives. China and Russia have deepened their bilateral trade agreements using local currencies. The BRICS coalition has accelerated its efforts to build a cross-border settlement system that bypasses Western influence entirely. These actions are not symbolic, they're foundational shifts. The list keeps growing. India now settles some energy contracts in rupees. Brazil is expanding yuan-based trade with China. Even Saudi Arabia, a longtime anchor of the petrodollar, has signaled interest in pricing oil in other currencies. The structure that kept the dollar in power is no longer assumed. It's being renegotiated in real time. Part of this exodus is rooted in self-preservation. Countries have watched how quickly access to dollar clearing systems can be weaponized through sanctions. In response, they've begun insulating themselves by building regional alliances, backing their reserves with alternative assets, and engineering parallel systems of exchange. Confidence is a currency, and that's where the dollar is showing cracks. America's national debt now stands at over $36.2 trillion, with nearly $29 trillion publicly held. That kind of imbalance sends a global signal. It says the foundation is shaky. And when the issue of the reserve currency starts bleeding credibility, others start looking for the exits. You can already see the ripple effects. The 10-year U.S. Treasury yield sits at approximately 4.47%. That's not just a market reaction, it's a warning. Fewer foreign buyers means less demand for American debt. And that weakens the very architecture that once made the dollar untouchable. In the background, gold tells a story no one on Wall Street wants to hear. It's quietly trading above $3,380 per ounce. Central banks aren't just buying, they're stockpiling at a historic pace. This isn't speculation, it's preparation. When central banks move in concert like this, they're signaling distrust in the system they once upheld. But it's not just about gold. The global chessboard is being reset. Infrastructure is being built to accommodate trade in local and digital currencies. The SWIFT system, once considered the lifeblood of global money movement, is facing competition from blockchain-based protocols and state-backed alternatives. What we're witnessing is more than economic diversification, it's political independence. The dollar's dominance has always come with strings attached: compliance, surveillance, and the threat of exclusion. As new financial alliances form, those strings are being cut. And yet, the average American investor has no idea this is happening. The stock market continues its daily churn. Financial news cycles obsess over interest rate tweaks and quarterly earnings. But the real shift, the tectonic movement beneath the surface, is being ignored. This ignorance is not harmless. When the dollar's influence fades, the consequences will be felt at every level. Import prices will rise. Capital will become more volatile. And the U.S. will lose the ability to export its inflation or finance its deficits at ultra-low rates. That's not a hypothetical. That's math. In a world where the dollar is no longer king, the rules will change. Countries will trade without needing American approval. Markets will price assets differently. And power will no longer flow through the same channels it has for generations. That moment is closer than anyone wants to admit. It won't arrive with a bang. It'll arrive the way all real change does, slowly, then all at once. One day you'll wake up, and the world will be operating on a financial system that looks nothing like the one we've known. The Federal Reserve is running out of tools. Years of quantitative easing and artificially suppressed interest rates have distorted the natural balance of risk and reward. In this kind of manipulated environment, the dollar's purchasing power erodes quietly, not in headlines, but in real household budgets. Simultaneously, tech giants and financial institutions are racing to adapt to a decentralized future. Private stablecoins, central bank digital currencies, and programmable money are no longer theories. They're entering real-world testing environments, and none of them require the dollar to function at the center. You can feel the shift in corporate balance sheets too. Multinational firms are diversifying treasury reserves, allocating into non-dollar jurisdictions, and preparing for the day when currency volatility makes today's assumptions obsolete. The smartest money in the world is already hedging against dollar centrality. This isn't a doomsday forecast. It's a recognition of reality. Every empire eventually reaches a point where the currency that symbolized its rise begins to fade. That moment is never marked by panic, it's marked by silence, subtlety, and denial. And while the U.S. still holds unmatched military reach and technological innovation, those advantages no longer guarantee economic dominance. We're entering a new chapter, one where influence must be earned, not assumed, and where trust is no longer automatic. Even at the level of consumer confidence, sentiment is shifting. Surveys show a growing number of Americans now question the long-term stability of the financial system itself. People are not just worried about inflation, they're worried about the very nature of money. Meanwhile, younger generations are already participating in decentralized finance. Millions are engaging with crypto wallets, decentralized exchanges, and digital assets not because of hype, but because they no longer trust the legacy gatekeepers. That loss of trust is a generational break, and it won't be reversed. Geopolitical actors are responding accordingly. Sanctioned states are building closed-loop ecosystems. Allies are quietly exploring bilateral trade agreements that exclude the dollar altogether. No one is waiting for permission. They're building the new system while the old one still believes it's in control. This transition won't just impact foreign policy. It will reshape investment strategies, savings behavior, even how we define risk. The institutions that thrived under dollar hegemony will need to reinvent themselves or fade into irrelevance. We're not approaching an economic cliff. We're walking into an economic redesign. And those who understand it early will be the ones who thrive through it, not just survive it. Monetary policy can no longer rely on historical precedent. The tools that once nudged inflation or stimulated demand are increasingly ineffective in a fractured global system. As countries build their own rails, the dollar's influence over capital flows begins to fracture. That's why major economies are building currency swap lines, settlement hubs, and localized credit systems. When trust in the global standard wanes, every region builds its own foundation. That's not just decentralization, it's survival. At some point, this shift becomes irreversible. It's no longer about whether the dollar should be replaced. It becomes a question of when and how fast the alternatives mature. And based on current trends, the answer is very soon. The media may still frame these moves as fringe experiments, but behind the scenes, they're being treated as inevitabilities. Capital is agile. It doesn't wait for permission, and it flows toward trust, transparency, and resilience, even if that means leaving the dollar behind. This is the critical window. The system hasn't flipped yet, but it's close. For those paying attention, the signs are loud. And for those who act now, there's still time to pivot before the wave crest. That's where the advantage lies, not in fear, but in foresight. Subscribe for grounded, high-impact insights on the financial transformation shaping our future. Stay informed while the world sleeps.